The RBA might have paused interest rate rises for now, but more than 1 million Aussies continue to suffer mortgage stress every single day.
At risk of mortgage stress because of the latest hike.
For some people, it'll be the straw that broke the camel's back.
We used to view Adelaide, Perth and somewhat Brisbane as those more affordable capital cities. That is no longer the case.
Something has shifted in Australia's housing market, and this time it looks deliberate. In the May 2026 federal budget, the government changed the rules on negative gearing and capital gains tax for the first time in over 2 decades. The RBA has hiked rates 3 times this year alone, pushing the cash rate back to 4.35, the highest in 15 years. Construction companies are collapsing at record rates. And Cotality, Australia's top property data firm, just warned that Sydney and Melbourne are already 5 months into the early phase of a price decline. Every lever that could cool this market is being pulled at the same time. So in this video, I'm going to make the case that this isn't an accident. The government wants prices to come down, and I can show you exactly how they're doing it. To understand why the government would want a correction, you first have to understand the paradox they've been trapped in for 60 years. Independent economist Saul Eslake, one of Australia's most respected housing voices, explained it on camera. His exact words: "We now have more than 60 years of evidence that anything that allows Australians to spend more on housing than they'd otherwise be able to results in more expensive housing. Every first home buyer grant, every stamp duty concession, every 5% deposit scheme, all of them have pushed prices up, not down. And here's the political maths that explains why.
The problem I have with it is that we now have more than 60 years of evidence that I think unequivocally and unambiguously shows."
Eslake pointed out that 12 million Australian voters own at least one property. 2 million of those own investment properties. That's a massive voting bloc that wants prices to go up. On the other side, only about 110,000 first home buyers manage to break through each year. For 60 years, no government has had the courage to side with the 110,000 over the 12 million.
That anything that allows Australians to spend more on housing than they'd otherwise be able to, be it first homeowner grants, stamp duty concessions, generous tax concessions for property investors, shared equity schemes, lower interest rates.
One first home buyer on Reddit captured the frustration perfectly. They said, "In the time my deposit grew 20%, house prices grew 25%. I bought a house with a much lower deposit than I wanted and now I'm struggling." That's the hamster wheel. You save, the market runs faster, and by the time you get in, you're overextended from day one.
The story of the housing affordability crisis is repeated across the country and also inside families. Let's compare 2 parents buying a house back in 2001 with their son and his partner trying to buy today.
And in another Reddit thread with 145 votes, one of the top comments, 189 upvotes, summed up the public mood. Homelessness is at record levels, working professionals are forced to share bunk beds in communal rooms, and families live in multi-generational overcrowded homes. Then they added, "The government has clearly shown no intention to reduce prices." But here's the thing, for the first time in decades, the government just did something different. And the timing is not a coincidence. In the May 2026 budget, the federal government announced changes to negative gearing and capital gains tax, the 2 biggest tax incentives driving property investment in Australia. The Guardian reported that the top 10% of earners receive 90% of the benefit from the capital gains tax discount. The government's own fact sheet describes the system as having turned Australia into a nation of speculators, rather than the nation of entrepreneurs and shareholders it was supposed to create. And they changed it. After 60 years of inflating the market, they pulled the lever the other way. At the exact same time, the RBA hiked rates 3 times in 6 months. That's not a coincidence. That's a coordinated correction.
The government could be changing capital gains tax. And depending on which headlines you read, it's either the end of the economy as we know it, or it's beckoning in a new era of housing affordability.
So let's walk through every lever being pulled at the same time. The RBA has raised the cash rate 75 basis points since January 2026, 3 consecutive hikes, reversing all 3 cuts they made in 2025. The average owner-occupier variable rate has climbed to 5.92%. Roy Morgan says 1.6 million Australians are now at risk of mortgage stress. And the RBA's own March 2026 Financial Stability Review confirmed cash flow pressures on household and business borrowers are expected to increase in the near term. They know what they're doing. The investor side is being squeezed from multiple angles. In Victoria, land tax thresholds were slashed from $300,000 to $50,000, the lowest in the country. One Melbourne investor posted on Reddit that their land tax jumped from $1,300 to $2,175 on a $750,000 property, an $875 increase in a single year. Their thread was full of investors discussing whether to sell.
The current system provides very strong incentives for people to invest in residential property, either by allowing them to deduct losses on rental property from their personal income, which is negative gearing, and also providing a 50% discount when they do sell the property. And between the two, it made residential property as an investment vehicle very attractive to people, and therefore we had many people investing in the real estate market.
And the government's own housing target, they set a goal of 1.2 million new homes in 5 years. The NSAC, the federal government's own advisory body, has already confirmed they'll fall short by 262,000 homes. Construction companies are collapsing at record rates. And ABC News reported that building a house in Australia is now 30 to 40% slower than it was as a decade ago. The supply side isn't just failing, it's being allowed to fail. And here's the proof that the government knows demand-side stimulus doesn't work. First home buyers in Perth slammed the October 2025 5% deposit scheme on Reddit, saying it backfired and pushed property prices higher. The community documented in real time how the scheme immediately accelerated price increases, pricing them further out, not helping them in. Exactly what Saul Eslake has been warning about for decades. And while investors are being squeezed, renters are caught in the crossfire. One poster on Reddit described attending a rental inspection in Brunswick, Melbourne. The queue was so long they had to take out a personal loan to offer 6 months' rent in advance just to compete. That's where we are, taking out loans to pay rent. To be fair, there's an argument that the government isn't deliberately engineering a crash. They're just managing inflation. The RBA's mandate is price stability, not property prices. And the negative gearing changes may have been about budget repair more than housing reform. But the timing, rate hikes, tax changes, and a housing target everyone knows will be missed, all landing in the same 6-month window. At some point, the pattern stops looking like coincidence. And here's the international evidence that shows what happens when a government actually lets a correction run. New Zealand's housing market corrected 16.2% from its 2022 peak. Adjusted for inflation, prices fell over 30%, back to 2019 levels. Net migration slowed to 14,000 a year, rental listings surged, and rents on newly listed properties actually declined. The New Zealand government didn't intervene to prop prices up. They let gravity do the work, and affordability improved. Australia is now pulling the same levers New Zealand pulled 3 years ago. The only question is whether they'll follow through or panic when prices start falling and reverse course again. Cotality's Tim Lawless, Australia's most cited property analyst, confirmed in May 2026 that Sydney and Melbourne are already 5 months into the early phase of decline. Melbourne has posted 5 consecutive monthly falls. Sydney is softening. Lawless described the situation as listings picking up as demand softens. The market isn't waiting for a prediction. It's already turning. The optimistic take. This is a controlled correction. Prices soften 10 to 15%. affordability improves, first home buyers get a window, and the market stabilizes without a crash. The realistic take: 3 rate hikes, negative gearing changes, and a construction sector in freefall all hit at the same time. The government's own advisory body says we're 250,000 homes short. Even if prices fall, the supply crisis ensures a floor. The bearish take: one Ausfinance commenter with industry contacts wrote in April 2026, 3 to 4 more rate rises to come, recession unavoidable. If that plays out, the controlled correction becomes something much harder to stop. And one Reddit post captured the emotional reality better than any chart. The title: "Renting is dehumanizing, exhausting, and depressing." One commenter wrote, "The problem is saving a deposit when you're paying rent. It's like asking a mortgagee to save a deposit for a second house without having the luxury of already being in the market." That's the generation this correction is supposed to help, if the government has the courage to let it happen. If you're a homeowner watching your property value soften for the first time in years, the data says this is deliberate. Rate hikes, tax reform, and a construction collapse are all landing at the same time. If you're an investor, the negative gearing changes and land tax raises are designed to reduce your incentive to hold. And the government published a fact sheet explaining why. If you're a renter, short-term news is bad. Investor exits mean fewer rentals and higher competition. But if the correction runs, prices moderate and the system rebalances. And if you're a first home buyer who's been locked out for years, for the first time in 60 years, the policy settings are actually pointing in your direction. Whether the government holds course is the only question left. Here's the truth. The federal government changed negative gearing and capital gains tax for the first time in over 20 years. The RBA hiked rates 3 times in 6 months. Sydney and Melbourne are already declining, and the government's own housing target is 250,000 homes short. I'll be covering every rate decision, every price shift, and every policy change as it lands. Subscribe to the Mosin Report so you don't miss the next video. Thanks for watching. See you in the next one.